Hello, welcome to the show. I was right on GameStop again, but that's not a surprise to anybody who's tuned in here more than once. Thank you very much for joining me. If that is you, welcome back. I appreciate you. If you're new, hit that like button, hit subscribe and ring the bell. Today we're going to be talking about GameStop, live person, and rocky outcrops discoveries from Mining Larry's tweets. Good to see you all in the chat box. I'll be regularly reading that and eagerly get into any donations that come in. If I don't see them immediately, do bear with me. This is GameStop on the 1 minute time frame. If we go up to the 15-minute, see price action coming in. Low side of that formation, turn on the extended hours. You can see you got your dip there. Fantastic price action for anybody who watches along with TradeSpot. We also had a fax request that came in from Tony. Tony says, as inflation cools and rate cuts become plausible, I'm looking at TLT TMF trade with a 1-year horizon for tax reasons. How can I balance technical analysis versus world events with this perspective to time my entry? Tony, great question. For those who don't know, TLT and TMF are ETFs that track treasury bond rates. With TLT, as interest rates drop, the price of the long-term bonds tends to rise. This is because fixed interest payments of existing bonds become more attractive compared to new bonds issued at lower rates. Therefore, if rate cuts become plausible, TLT, which tracks long-term US Treasury bonds, is likely to see an increase in price. TMF is a leveraged ETF and aims to deliver 3 times the performance of the underlying shares. This means that any movement in the price, well, it's not shares, it's 20-year Treasury bond index. Any movement in that price of those long-term bonds, as represented by TLT, is amplified in TMF. If rates drop and TLT increases, TMF would then see a more significant rise. So it comes with higher volatility, that represents larger opportunity, and that's commensurate to the larger risk you'd also be taken on board. In order to answer that question, Tony, we have to look at the recent EU and UK context, because both the European Central Bank, that's the ECB, and the Bank of England, that's BOE, have faced cooling inflation and are looking at potential rate cuts themselves. We can absorb all of the information coming from them and observe the bond markets, where we've seen a rally in government bonds as investors anticipate lower future rates already. The expectation of 2% inflation and rising in unemployment is in line with economic conditions that would prompt the central bank to consider rate cuts. These conditions generally support the case for bond price appreciation. So, diving a little deeper into Tony's fax request there, he talks about tax considerations due to the holding period. And in America, to benefit from long-term capital gains tax rates, you'll need to hold the assets that you're trading for longer than 1 calendar year. The tax rate on long-term gains is generally lower than short-term gains, though that's not true in all jurisdictions. Tax rates in the US, it is true. Long-term capital gains typically 0%, 15%, or 20%, depending on your taxable income. In the UK and the EU, rates vary by country and individual circumstances. Another question that pops out from that question, from that fax, is what happens if price rises significantly, and so you'd have made huge gains before the 1-year mark, which would lead to higher short-term capital gains, which are taxed as ordinary income. These sort of things are all relevant for your GameStop trades and your LPSN trades as well. What happens now is you need to balance the technical analysis with these world events. Technical analysis, of course, used to identify trends and signals potential entry points. It's also how you'd manage risk on any given trade. For TLT and TMF, you would look for the same technical artifacts, such as those higher highs and higher lows, to confirm an uptrend. You'd also look for it on those longer term time frames. You might use moving averages and then the long term version of those indicators. You'd look to the relative strength index on those long term time frames. You'd assess the support and resistance levels, and you'd use them to help you refine those entry, exit and risk management points. With regards to world events, you'd need to keep an eye on those macroeconomic indicators such as the inflation reports, the employment data, central bank announcements and their calendar of events. All sorts of developments in the world or acts of God could shudder and trigger sudden market moves. That technical analysis would help you absorb that risk through your strategy towards price. With a 1 year time horizon, Tony, the focus would be on the broader market rather than short-term fluctuations. So you'd look for periods of economic data releasing and central bank meetings in order to perhaps target an entry point around. You also want to look for that potential volatility to be in line with the trend, and that's why these events might signal good places to buy. Risk management is a crucial part of your technical analysis, and it's even more important when you're looking at long-term trades. So stop losses are a smart decision to protect against unexpected adverse moves and will allow you multiple opportunities to enter the trade. As you have two different tickers mentioned there, it may well be that you're looking for the leverage product, TMF, after an established trend, or having been knocked out of a trade on TLT and looking to not trigger those wash trade rules. There are specific nuances about each of those tickers that you'd also want to be aware of. TLT, providing direct exposure to long-term US bonds, offers a relatively safer investment opportunity with moderate returns. TMF, on the other hand, offers leveraged exposure, which means it's more suited to traders with a higher risk tolerance and a clear strategy for managing leveraged risks. So as inflation cools and cuts become more plausible, I too am looking at TLT and TMF trades, not with exactly the same time horizon because I'm in a different area, but the similar asset for similar reasons. Historically, falling interest rates will lead to rising prices for long-term bonds as the rates themselves drop. So the passive income goes down and the capital appreciation goes up. This also might push you towards considering real estate investment trusts. I've got an excellent guide on how to trade those on my Patreon, patreon.com/tradespotting. With this 1 year time horizon and these potential falling rates leading to that capital appreciation, and TMF being a leveraged product, you'd want to consider that it does provide you with amplified returns, but of course higher risk. And then using those recent trends in the EU and the UK, where the central banks are already contemplating rate cuts amidst their cooling inflation here and the rising unemployment, could support that strategy of entering a leveraged ETF. For tax reasons, holding these assets for longer than a year will significantly reduce your capital gains. However, if your trade is achieving a substantial gain earlier than your time horizon, and that leaves you in danger of giving up profit that might eventually surpass or outweigh the consideration with regards to the tax payment, then you'd want to move that stop into profit to capture and hold on to that profit. Considering those taxable gains for short-term trades against this potential on the chart means you need to be versed in technical analysis. So balancing the technical analysis with the worldwide events and the calendar at the Fed, along with all of this contextual information from other central banks, can help you identify patterns and place them in context with the higher lows and higher highs that you're seeking. My entry strategy will involve scaling into position over time to average my cost basis, and I'll be using stop losses for risk management along with the capital exposure. That is to say, the amount of money I risk on the trade will step up as the trend develops. For structured approach, consider taking the technical analysis course at www.technicalanalysis.school. All relevant factors with regards to technicals are covered there, and it'll help you develop a comprehensive view and a strategic approach to price. That's Tony's fax request. He chucked in $15. That answer is worth hundreds and hundreds of dollars, so you all got it free. Think about supporting the show. Definitely hit that like button. And if you've got your own questions, be like Tony. Submit a little fax request using the link in the description, and I'll do my best to help you out with your request. I'll jump over to the chat box now and catch up with some of the things people are saying. Yes, I'm in the forest, Charles. Good to hear it, Devon. Nicholas Ryan, any thoughts on what happened to MLGO? 5 times volume, no news, and the stock is up 92%. This is a strategic approach to price that many traders use, where they focus on high volume stocks which have got a low market cap and open with a gap. The way to trade it is using technical analysis, tight stops, follow in with a pullback stop loss strategy, and bearing in mind that these are high risk tickers with extreme volatility, and what goes up must come down. We're not playing poo sticks, we're here to trade. Thanks for the good question, Nicholas Ryan. Started. I'm in a village and it smells like poo. So it reminds me of the crypto market. Good to hear it sorted. Yes, somewhat kind of ghost. Who says, why do your volume bars look like kids' chicken scratch? Am I tripping, or is that intentional? Does very much look like chicken scratch. You get the white volume bars here with a slight curve. Those that are more transparent, that's when selling volume dominates the book. Let's drop down to the 1 minute time frame where that volume on open is relevant, and you can see so are TradeSpotting's lines, providing excellent risk management solutions for anybody trading GameStop or following along with my approach to price. At these most recent lows, you had this bullish reversal divergence that suggested price was going to move up at open, despite the fact that pre-market they saw a little bit of a dip. I'm sure the bears got excited about that, but typically when people use pre-market or post-market prices to justify their technical analysis, that's exactly what they're doing, using it as a justification, and in fact that technical analysis doesn't exist. They're emotional traders. They're typically a bunch of fucking idiots, and they later use the technicals and or that post-market or pre-market price to justify and validate their emotional decisions. So if you see that type of commentary, then you know it's coming from an idiot, and you, not being an idiot, won't dwell on it or spend too much time being worried about the words of idiots. Hit that like button if you're not a fucking idiot. Live person, a little bit of a pullback since open. Come back to test that entry. Possibly come back and test the hot point on the harmonic. Never really reached the D. Not having exceeded the previous C means that you're still looking for this thing come down to 0.49, potentially 0.45. Going up to the 15-minute time frame here, you can see these two entry ideas and the targets for price should that harmonic prove to lead into a reversal in price. This is a Gartley. Typically you see these at the low side of a trend, and they represent strong reversal opportunities. They also deliver really clear risk management zones and targets for your trade. This particular one has already made a move to what would be considered a 618 of the C to the D, even more so. The full resolution of that harmonic might be taking price back to 0.89 or closer to $1. So we're waiting for that entry patiently. Or we're not, we're buying it at open, we're slapping that ask, and we're getting it as soon as we can with as much as we can, depending on the liquidity on hand and the time ahead of our live show on YouTube. That's a quick take on GameStop and live person as you start the day. Down to the 15-second time frame where you see those most exciting moves on price evolve in front of your very eyes. And also now dropping into Rocky Outcrop's discovery from mining Larry Cheng's tweets. If you haven't yet hit the like button, know that I think you're a fucking idiot and I'm really angry at you. I also now would demand that you share this live stream with the words, "This is the greatest stream I've ever seen and I apologize for not sharing it sooner." Tag GameStop and live person. This is Rocky Outcrop's Twitter. I shall make it smaller and move it over. Don't worry your pretty little head. Rocky says, and he's right. Follow Rocky Outcrop on Twitter if you're looking for an expert to help you with low-hanging fruit, high-value commentary, and expert analysis on all important stocks as and when it's pertinent. His Twitter handle is @Rocky_Outcrop. That link to the Discord that you see under the chat box, that's also where you'll find him delivering excellent coaching to the greatest group of the most excellent traders that have ever existed in these bodacious markets. Big changes coming at GameStop. Board member Larry VC, that's Larry Cheng, the co-founder of Volition Capital, the confidant of Ryan Cohen, and the director and member of the board at GameStop. Now he's a member of the board at GameStop, A director, that word is synonymous with the word leader. And Larry, a graduate with a degree in psychology, is well aware of the potential meanings and implications from his communications on Twitter. Anybody